And then last week we had two discussions, a strategy discussion, married puts on an inverse volatility ETF, and searching for spreads on lower volatility ETFs as well. Well, at the end of those discussions last week, we entered the positions into the portfolio that matched the criteria that Chuck was looking for in the married put on the inverse ETF, the inverse of the VIX ETF, essentially. If the VIX is declining and his sentiment is declining over time, what might a married put, or potentially in a similar structure, look like on that inverse volatility ETF? And at the same time, looking at spreads for lower volatility ETFs, what could we find? A customer was looking for a specific low volatility ETF, but didn't like the premiums. So we used our default sample search, spreads on indexes and ETFs, to identify positions. And we began to track those in the portfolio tools. So let's go ahead and take a look at the My Portfolio section and go into the portfolios. This is where we track our open positions. And from Chuck, the positions we wanted to look at were on SVIX. That is the 1X inverse VIX futures ETF. At the close of Friday, last week's discussion, SVIX was trading at 31.45, and we used our preferred married put structure to identify positions, one that wasn't too deep in the money, as we would normally go, but unfortunately it did carry a 12.6% maximum risk. The volatility of the inverse volatility ETF options far out in time, as we preferred to do with our married puts, the March put, which was 196 days out in time. The regular structure, keeping under 20%, was a double-digit risk, which we normally don't like to take. However, we could go further in the money in this situation with a higher volatility, higher implied volatility options, married put structure to keep a controlled risk of only 7.5%. Now, the position as a whole hasn't moved too much. Let's take a look at the stock chart since we got into the position last week. And last week, about 5 days ago, we did see some movement up. We remember we got in at about 31.45. It looks like it's near the peak here. And we had some declines downwards. We had some push up today. The VIX actually increased, so our inverse SVX decreased, but we started to move back up and had a decrease in the VIX today. During that discussion, we also talked about the technicals that we were looking at. Positive MACD crossover, where both the MACD and the EMA9 were above the divergence or signal line. Other criteria that were used in that as well. But with the security being down slightly, the puts also declined, so both are actually about a similar loss of about 1.9% of what we entered into the position. Wouldn't expect it to be that high, but I think we saw an implied volatility release as well. As the VIX started to move up, naturally the volatility across the market, including the inverse ETFs, began to drop slightly. So we did see more of a decline on the put options than we saw in the stock in the last 7 days. And that was one of the things we talked about in that first video, the unknown about the fluctuations of volatility and using a volatility ETF for this kind of structure, even though the technicals looked very strong. With that positive MACD, as I mentioned, positive Bollinger Bands, you probably had a positive Fibonacci and other things. And the RSI wasn't too high. It wasn't up in that 80 to 90 range. Why I'm mentioning all that, even though we're only 7 days in, we've got 190 days of protection still left. The married put is a longer term approach. That's what Chuck was looking for. But we created a search using those similar technicals in the married put screen, aside from our defaults. We took a look at the stock quotes page for what we were evaluating on SVIX, and we incorporated those technical criteria into a screen. Now, here's our default married put screen, following the rules in the blueprint, the full course for our preferred limited risk structure, the far out in time, deep in the money married put trade, keeping the risk to single digits, which stacks the market odds in our favor and puts us on the right side of the lie of leverage, or what's called gambler's ruin. Then we'll look to apply the 12 different income methods on that position to lower that initial low risk, generate income, increase potential profits, and potentially bulletproof the trade, where our risk might go from 7.5% over the first few months down to 0%, with still having 3 or 4 months of protection remaining in place with no risk to the downside. That's what we call being bulletproof. Now, I'm pretty sure I saved that search. Testing historical, I believe, is what it was. Let's take a look here. And I think this wasn't the one that I created. I thought I saved it under something. We were looking for something different. I'm sorry, I could have sworn I saved that. It wasn't July 12th. It wasn't my radioactive search. I apologize, folks. Well, let's go ahead and take a look then and try to figure that out. So we can see, I'm going to show an example of something. Let's take a look at SVIX as we did last week and just go to the basic quotes page. And we saw this on the chart as well. And some of the things that we looked for is, well, the stock was trading. Oh, I'm sorry. We have to go back historically. Here we're looking at the current snapshot in the quotes page of any stock symbol you enter up at the top of the page. On the trial, of course, as I mentioned, we have 3 months of historical data. If you sign up for the historical subscription, you'll have about 7.5 years or so of historical data that you can view on the full option chain, the stock research pages for looking at the option research page, or for the historical search in a given strategy, or the historical search by symbol. So let's go back to September 1st and see some of the criteria that we were looking at. I'm sorry. Yeah, September 1st. There we go. Excellent. Now, the stock was trading at 31.45, almost the same as I mentioned, as where it is today, just a little bit of fluctuation. But the 20-day moving average was at 27.71, and the SMA 50 was at 28.08. So we looked for stocks that had a that were currently trading above their SMA 20 or their SMA 50, I believe. At the same time, we knew that we wanted to look for technicals. We wanted to look for the MACD that was positive, where the signal line was positive, and the MACD was above the signal line. Other things that we look for, I'm looking for the 1-year range. We wanted something that was above the 75% 52-week range to see something that had been in an uptrend and was near the high. But I don't remember if Chuck wanted to limit it to less than 100 or not. I'll have to look into that. And some other criteria that we used, I know we used something else, and I just can't remember what it was, but I'll think about it as soon as we go into, it was the Bollinger Band. We were looking for stocks that had recently moved above the upper Bollinger Band. We're showing a Bollinger Band breakout. So what we did in that case, we went back to the Married Put screen. We went to search. The default Married Put search appeared, where, as I mentioned, we're looking far out in time. So we're buying put options that are farther out in time, which doesn't mean they're more expensive, but the option that's 6 to 8 months out in time is not 6 to 8 times the cost of the near-term option. As you know, when you're selling premium, you want to sell week by week or month by month to get a better annualized return. When you're buying positions, we want to buy further out in time so we're paying less week by week or day by day. We have a lower annualized cost on the position. Although we're paying more up front, we're getting a lower monthly risk on the trade. So our base criteria here, we don't want to go more than 20% in the money. We want to keep the range, risk range reasonable. And at the same time, we want to keep a reasonable bid-ask spread. Now, for the technicals, what we normally use, we're going to take that out. We're going to take out the average stock volume, and we're going to take out the historical volatility of the underlying security. And what we're going to look for is a percent BB20. SVIX was broken above the upper Bollinger Band when we looked at this last Friday. So what we want to do here is we want to look for a Bollinger Band maybe greater than 90 or greater than 95% for similar stocks that might be in that upper Bollinger Band range. As I mentioned, we're going to keep the stock price to be above the SMA 50, but at the same time, we're going to look for stocks where the MACD has been above the EMA 9, the signal line, for at least 1 day or more, where both the MACD was positive and the signal line was positive above the divergence line. And then we went into the fundamentals. We're going to leave the stock price between 9 and 200. We're going to take out the earnings per share growth, just because some of the securities, well, the SVIX didn't have a positive earnings per share growth. But we like to keep that in there. It's Ernie's idea that a reflection of positive earnings and positive earnings growth is a reflection of good management, and that will drive further profits in the future. So we're going to leave that in. Let's just go ahead and submit that search and see what we have. All right. So we've got some breakout stocks you might recognize: Oracle, Halliburton, Google, of course, was in there, Apollo Group, ARES Management, CrowdStrike, and more. Now, the settings might have been slightly different, but we created this during that webinar, which you can view on the YouTube channel related to the inverse ETFs, to see what criteria we used that matched what we saw with SVIX, to say, okay, Chuck, here's what you wanted to do because your anticipation is that the market's going to be more stable, the VIX is going to drop, so the inverse ETF, the SVIX, is going to move up, which is a perfect structure and a perfect sentiment for the married put trade. Now, we're only 7 days in on a long-term trade, so you're going to see some fluctuation. We're not seeing a positive return right now. We're just seeing what's in the wash. A little drop in the bucket here and there due to fluctuations in the price. We're not worried about it. We're not concerned about it. But the reason we're going through this exercise, though I thought I saved it last week, apparently I didn't on our webinar account, is because we went through and picked out this technical criteria which would have matched what the exact or very similar thing we're seeing with SVIX that might have piqued Chuck's interest. Even though his sentiment is for volatility over time, you might have a sentiment that oil is going to be strong over the next quarter or so, or maybe gold or metals or mining. And we could screen specifically for that using just the basic sector or industry screen or the stock list screen, create our own stock list. We created this search to mimic what we saw with the technicals of SVIX and ran it last Friday. So let's go ahead and save this search properly this time. And we're going to call it September 1st Technicals to Mirror SVIX. And we're going to just add details from the open forum discussion. All right, so let's go ahead and save that search. And why am I doing that? So now that we have similar stocks that match the technicals that we saw for SVIX with the preferred structure that we want to see, as I mentioned, we can go into the back test. We can do the Smart History Excel to test the search criteria in the past to see how our results did, or the search by symbol. If I just wanted to look at married puts or bull put credit spreads on Apple from 3 weeks ago, 2 weeks ago to see how they performed, we could do that. But we're going to use the Smart History Excel, which is the same as the search we just used. And now we can input what we wanted to see. What were the trades that would have matched our saved search on September 1st? So I select the date first. Then we're going to select our saved search, matching those technicals we used for SVIX, and go ahead and submit it. Now, this is going to take a brief moment. Normally, it won't take this long. But what we're doing right now in the background is we're uploading all of the historical data from today's close into the database. So today's September 8th historical data will be available. And as I mentioned, these are some of the positions that we saw. Oracle is still there. Google was there last week when we ran this. Apollo Global Management, Flowserve, I think we talked about, is one that I was interested in as a potential married put for this week, opening as a new trade. ARES Management was in there. Splunk, kind of a concern, kind of volatile, but was in there. Arista Networks, we had some discussion on that. That's a very positive married put trade we had in the Fusion account at Radioactive Trading a couple of years back when it was, I think I closed out of the position at 138 or 140, riding it up from 115. And now it's up to 197. That's one of those ones you closed out and you check a year later and say, oh, I should have just held maybe 40 shares, 50 shares, 200 shares of it and just let it run. Well, in any case, what's the deal? Here are the stocks that would have matched that default criteria for that technical screen last week that we set up with Chuck. Now, once I've run my search for my historical data, I can hit Calculate Group Results. And what that's going to do is calculate where each position stands right now, even though we've only been in it for 7 days or so. based on what the put premium is, my apologies, and where the stock is right now. And a muted market. We've only been for 7 days. We have some gains, some losses. And as you can see here, over the last 7 days, using that technical criteria with the same married put option criteria that we'd want, keeping the risk to single digits, not going more than 20% of the money, being at least 150 days out in time, we're at only a 39% success rate if we liquidated everything right now, which would not be our plan. It would not be Chuck's plan to liquidate the SVIX married put positions after the first 7 days. And the average loss is only 0.4%. So in addition to being able to see the gain or loss on each of the top 15 positions that matched our criteria, that matched our criteria from that historical search. The big loser here is Futu Holdings. What is the one that I mentioned I was interested in? The Apollo Group we mentioned, that's a 0.7% gain, it looks like. Flowserve is a loss of 0.1%. Again, in the wash, not positive or negative. We're looking for longer term. Down here in our summary, as I mentioned, 7 out of 18 positions are showing a profit, or only 39%, for an average loss of only 0.4%. While at the same time, QQQ and SPX are both down minus 1.3%. The benefit and advantage of limited risk trading. Okay? Stacking the market odds in our favor to have a lower risk during downturns. Yes, we give up some returns. If the SPX and QQQ were up 1.5, 1.7%, we might only be up 0.75, 0.8, or 0.9%. But it's for the safety of protection that if any security we dropped 10, 12, 15, or 20%, such as Futu Holdings, which when we got in was at 63.39, is down at 57.95. That's not too bad. It's a little bit less than 6 points, but that's only almost a 10% decline. We're only down 3.4%. Now, that just gives us a basic baseline. Remember, in the portfolios, for the SVIX positions alone, both are down 1.9%. So it's a 0% winners. Instead of a 39% win ratio, we have a 0% win ratio on the SVIX put options, the SVIX married puts, apologies, I should say, and an average loss of 1.9%. Compared to the technical screen that we used on the standard stocks in this case, 39% success rate, not great, but only a 0.4% loss versus 1.9, less than just buying SPY or QQQ during that time. Well, that's just an interesting comparison. It goes back to what we discussed in that presentation about the risks of doing the volatility ETFs or inverse volatility ETFs. But again, it's only 7 days in. But since we've gone this far, I want to go one step further. Now that we're here in the options backtesting tool, this was using those technicals we mentioned that matched what was in SVIX. What would we see as an average return rate after 7 days had we followed the standard default radioactive positions sorted by earnings per share growth? So I think that already submitted that for me. I apologize, but let's just do it again to make sure. I'm seeing Pinterest, CrowdStrike, Shopify, Splunk again still in there. So let's go ahead and submit that search with the radioactive sorted by earnings per share growth. Yeah, it was the same one. So DraftKings, DoorDash, Cactus, Schlumberger, the top 30 or so results here out of 243 that matched our default married put criteria, again, looking for stocks above the 50-day moving average. That earnings per share growth I mentioned, and of course, just looking for an average stock volume of reasonable historical volatility, but keeping it to our preferred stock list as well. Let's go ahead and calculate those group results and see what we've got. And this outcome might be very similar to what we saw in the last 7 days of the technical screen that we ran. Or it might be worse. Looks like it's a little bit worse. So it's about the same, isn't it? 12 out of 30 with a 0.5% average loss over the trades compared to QQQ and SPX being down 1.3%. So too early to tell. Absolutely. But again, just a comparison there, a fair comparison of Chuck's idea is a good one if that is a sentiment long term. Don't get me wrong, the married put is a bullish strategy. It's not bullish to neutral. We want stocks to move up. In the Blueprint course, we discuss 12 different income methods that we can use to generate income, as I mentioned, lower that initial low risk, and potentially bulletproof the trade as time goes on. Why are there 12 different income methods? Because some of the income methods are used when the security is moving up, some can be used if the stock is stagnating, and some are used if the stock has fallen, but you expect it to rebound, or you're anticipating a change in the market and anticipating the stock can fall to add extra protection, potentially profit in both directions, just generate simple income, even as simple as selling a covered call position. But all of that information, the full 12 income methods and more, that's what's discussed in that full course, The Blueprint, which walks through the initial structure, the benefits of controlling risk and limited risk trading, as well as proper position sizing, the 3 core principles, and of course, the ins and outs of the 12 different income methods as well. So you can read more about that there, but of course, at any time, you can also just head over to radioactivetrading.com, where we talk about full insight on the blueprint, and you can just put in your first name, an email address, or name and email address, I apologize, and get the sketch. Sketch is a free 9-page white paper that introduces the limited risk structure and some basics of the first income method number 1, selling a call against the trade, but doesn't go into the full details. It's discussed in the blueprint, which you can see on the products page here. It's all online now. It's not a hard copy that we send to you, so you'll have instant access if you purchase the blueprint. And of course, as you purchase the blueprint, you'll also get other bonuses that are available, including a free month of Power Options, a free discounted month of the Fusion portfolio here at radioactivetrading.com, which allows you to see what positions Ernie and I are doing, as well as have access to various lessons to reinforce the blueprint content, and much, much more. So you can check that out at radioactivetrading.com or at Power Options, or simply just get more introduction by going to radioactivetrading.com, putting in your name and email address, and click Get the Sketch. We'll send you that free 9-page white paper as well.